The euro rises against the dollar for a second day on news that Greece is cutting spending and raising taxes. But will it maintain that momentum? Michael Woolfolk is senior currency strategist at Bank of New York Mellon. He joins us now from his firm here in New York with his perspective. Michael, welcome back to Bloomberg News. Always good to see you.
Yes, good afternoon.
Michael, talk to us about that. Is the euro oversold, or is it still trading on this news out of Greece?
Well, certainly the euro is oversold. I think the speculators have been largely behind it. If you take a look at the CFTC weekly commitment of traders report, it indicates that we have a record short position against euros. This extends to sterling as well, which is oversold at this point. So I don't think that the euro yet is truly trading off of fundamentals just yet, although it's certainly sensitive to the news flow.
So I guess the question that I asked before I actually started talking to you, can it maintain that momentum?
It's quite difficult. I think we're still quite a ways away from the EU providing a backstop, a bailout, if you will, of the Greek debt problem. It will likely then turn to an issue of other peripheral nations within the EU that have similar difficulties in terms of their fiscal deficits. So I expect there to be further volatility and further short selling over the course of the next 2 to 4 weeks.
Michael, can you give us a sense of the Greek debt crisis and whether or not we could see a ripple effect among the other nations of the EU?
Well, I think what you're talking about is a contagion effect. And,
absolutely.
When it comes to speculators, particularly on the short side of the market, there's always certainly a potential for this. I think it's important to put into perspective the fact that how this got started in the first place, and that was the Greek government revealed in late 2009 that its fiscal deficit was approximately twice what it was initially estimating earlier in the year. That came at an inopportune time for market as we were just closing our books for the end of the year. And with speculators then piling on, we had the situation being exacerbated somewhat. So we look to others in the region, such as Spain, perhaps Ireland, Italy. It's really Spain, I think, that would be the next peripheral that would be of concern with a fiscal deficit of over 10% of GDP
sure,
in 2009.
And we saw their unemployment rate is on the rise, too, way up there in double digits.
Right. So I think that the solution is coming. The solution will be put in place by the EU in a course of maybe 2 to 6 weeks or so. It needs to be, because there is some contagion effect potential here. And essentially you have a very reasoned, methodical way in which members enter the Eurozone,
right.
but no consideration given to the exit from the Eurozone.
Right.
And consequently, I mean, you really need to have membership in the Eurozone a privilege rather than an entitlement. Otherwise, it's a slippery slope, and you have essentially the Euro subject to its weakest link.
Michael, Germany deciding to step up and be a backstop, the word that you used for what's going on in Greece.
Yes.
Talk to us about that. Talk to us about the significance of the largest economy in the EU saying that they'd be willing to help.
Well, I think it's pivotal. That there perhaps is not going to be sufficient resources available without Germany involved in some way. It may not be something orchestrated at the public level. It could be something that could be organized at the private banking level. But in any event, Germany has to be a major proponent that is part of the solution. But again, I think a one-off treatment of Greece only is asking for trouble. It has to be more of a rethinking of the Euro project, an experiment, and a solving of that situation. But
right.
It certainly would require the involvement of Germany.
Michael, we have about a minute left. I guess to sum it up, is Greece right for the euro, or should it go back to the drachma?
Well, if Greece can bring its fiscal deficit back towards the 3% of GDP Stability and Growth Pact criteria, if it can bring total debt outstanding back to 60%, let's say those two criteria within the next 3 years, yes. I think that there is not sufficient political will in Greece for that. We had public demonstrations and strikes even before the latest round of austerity measures.
Right.
I doubt that the current round of austerity measures is really going to pass political muster. So it's difficult. It does not look like Greece is sized yet for the euro.
Right.
And consequently, they may have to return to the drachma at some point.
Then, Michael, about 20 seconds left. Does this bring into question whether or not the euro is in fact right for Europe?
I think that certainly the euro is correct for Europe, but it may not be correct for all members of Europe.
All right, Michael Woolfolk, senior currency strategist at Bank of New York Mellon, talking to us about the goings-on in Greece and throughout Europe. Michael, as always, thanks for your perspective.